Why is there so much just anxiety and tension and people kind of wringing their hands when we're not expecting much to be said?
Yeah, I think the Fed probably prefers it that way. They don't want to be the main driver of stocks. I think you'll see the Fed this year transition from independent variable to dependent variable. I think that's going to be the message today. No new policy changes or even communication changes really from the Fed. I think Jay Powell in his press conference is going to stick to the view that they're not going to be moving anything on policy accommodation unless and until the economic data tells them that it's time to do so, which makes them the dependent variable, with really the vaccinations, the virus, and the economic reopening being the things that will ultimately push the Fed to act if it feels like it needs to start removing accommodation. So I don't think he's going to give the markets anything to chew on one way or the other today. And what we're seeing with the drivers today is more on the earnings front than anything else.
So, Brian, that's not until this afternoon. Maybe Fed Chairman Jay Powell will give us a lot to chew on. Maybe he won't. It doesn't sound like he will. But until we get to that point where we get that announcement, how do you see the market day shaping up? And why is everything lower for the most part?
I think the one thing that NASDAQ is higher or is set to open higher because of the Microsoft earnings from last night. So I think really we're kind of retrenching here a bit from a very hot open to the year. We saw cyclical stocks leading. We saw the interest rates moving up pretty aggressively, and all those things have retrenched a bit. We're seeing now growth stocks do better. I think there's some doubt or skepticism about maybe some of the vaccines, the new strains. Anytime there's an absence of good news, you tend to have maybe skepticism or bad news tend to fill it. That tends to be what happens. So the good news needs to come from maybe the Fed, maybe some of the economic data we're going to have incoming this week on consumer spending, GDP, although I doubt it. And then I think that ultimately what's going to make the biggest difference is evidence that the vaccinations are ramping up into that 2 million, 2.5 million per day range in the U.S. and ultimately, hopefully, in Europe as well. And I think that is the key to unlocking the economy. Unless and until that happens, I'm not sure that there's going to be much upward momentum from stocks, except for better than expected earnings. So, Brian, you sent us your research. You say there's a case for risk-on investing, and it's partly due to valuations. But we constantly hear that valuations are sky high, maybe too high. How do those two things jive together? Yeah, so when we say risk on investing, we just mean in terms of a full portfolio. If you're looking at the choice between owning stocks, owning bonds, owning cash, the case is still pretty strong just based on valuations that stocks are actually the most attractively valued. Now, everything is expensive. Cash, if you want to think of it this way, is expensive because it's not paying you anything to own it. Interest rates have almost never been lower. The market has never been valued more highly, except briefly during the early 2000s, late 1990s. But if you take all those things in a relative sense, stocks still offer you the best risk-adjusted return over the next 5 or 10 years, which is really what we're looking at. And so I think risk-on investing, based on not only the valuation, but our outlook for the rest of the year, which is the economy is set to get a whole lot better. People have a lot of pent-up demand. Balance sheets look pretty good, both for corporations and households. So by the third quarter, fourth quarter, we think things are going to be a lot better economically speaking. The stock market is already latching onto that optimism in terms of the progress we've seen cumulatively over the last couple of months. All right, one last question before we let you go, Brian. How did the vaccine rollout, how did those impact the market in 2021? A lot of big vaccine news today from the Biden administration. What sectors do you see being impacted by this increased focus on getting those vaccines out to people? Yeah, the more good news we get on vaccinations in terms of supply, delivery, and actual shots into arms, that tends to be better for cyclical stocks because it pulls forward the eventual economic reopening and allows some of those companies that have been a bit more distressed because their business models are heavily COVID sensitive, so travel, leisure, even stocks like energy stocks, bank stocks can do better if interest rates are going to be rising in anticipation of economic growth in the future. All those things are going to be tend to do better when there's good news on the vaccines. If we see bumps in the road, if we see these kind of new virulent strains coming and becoming more prevalent, maybe they become more vaccine resistant. That's when you start to see a retrenchment into some of the defensive parts of the market, including technology, which has become in this day and age a more defensive sector.
Shepard Smith here. Thanks for watching CNBC on YouTube.